What's up, everybody? Welcome back to Trades and Gains. I'm your host, Max Pitts. And first thing first, I want to thank you guys for 1,000 subscribers over on the channel. Big accomplishment, big milestone, and I appreciate every single one of you. Now, let's get into our weekly outlook report, and let me just get this straight. The Supreme Court nukes a major chunk of the tariff regime. Nvidia reports earnings this week. Oil is up 15% year to date, and inflation is sticky, and somehow markets closed green last week. Ladies and gentlemen, welcome to 2026. This week isn't about one headline. It's about policy, geopolitics, and AI all colliding at once. We've got SCOTUS, tariff fallout, Iran tensions pushing oil higher, Nvidia earnings, aka the AI heartbeat, and PPI inflation data. And each one pulls the market in a different direction. So today, we're breaking it down the only way that makes sense. What just happened, what actually matters, and where the pressure points are, and what it means for SPY, QQQ, and IWM. So let's go ahead and get straight into it. And before we start today's video, if you want the best options flow software on the market today, make sure you sign up for investorcentralclub.com, who this video is powered by. Use the code SUPERMAX20 to get 20% off your first month. And, well, come join a great community of like-minded people. You'll get to learn a lot. You'll get to maybe even make some new friends. Anyways, let's go ahead and dive into today's video. The Supreme Court struck down Trump's sweeping emergency tariffs last week. IEEPA authority, well, it was overstepped. The translation, the broad legal tool used to slap tariffs across almost everyone, well, that's gone. Markets, they initially dipped, but then they reversed green and hard. Why? Because tariffs are inflationary. Remove tariffs, it removes some price pressure. That's disinflationary at the margin. It also improves trade optimism. Industrials, exporters, global cyclicals, they finally get to breathe. But let's not kid ourselves. The administration immediately pivoted to fine, we'll use Section 122. Here's a 10% global tariff. That's like getting grounded and then sneaking out the back door. So what's the real takeaway here? Well, this reduces the scope of extreme tariff risks, but it does not eliminate trade policy uncertainty. And here's the sleeper issue: $175 billion in potential refunds. If companies demand that back, well, that hits fiscal math, which means more borrowing, more issuance, and more pressure on yields. So yes, this is mildly bullish short term, but it's not a structural trade reset right quite yet. So that's one thing to keep in mind. Now, let's go ahead and talk about the thing that traders whisper about and pretend isn't important. Oil, up 15% year to date, up 5.5% last week. Why? Well, one word: Iran. Trump gave Tehran 10 days to negotiate. That's not subtle diplomacy. That's a countdown clock. That's a doomsday clock, all right? The Strait of Hormuz. Roughly 20 million barrels per day pass through there. If tensions escalate, you're looking at $10 per barrel on small targeted action, 15 plus on sustained spike if retaliation escalates. And remember, oil feeds part of our inflation. So while tariffs may cool goods inflation, geopolitical risk pushes energy higher. That's the kind of offsetting force that keeps the Fed uncomfortable. Prolonged uncertainty alone sustains a risk premium, and markets hate persistent uncertainty more than they hate bad news. Now, let's talk about our belle of the ball, the event of the week, Nvidia reporting earnings on Wednesday. This is not just another earnings call. This is an AI barometer. The AI trade lives and dies by data center demand, GPU backlog, guidance tone, and CapEx commentary. If Nvidia confirms demand is still nuclear, well, the AI narrative will get a nice dose of oxygen right there, right? If guidance is soft, well, software and semis will wobble. Remember, software has been under pressure all month. Salesforce reports as well. So we get hardware demand, software sentiment clarity. This is the week AI either stabilizes or that rotation is going to continue. And as you've probably seen on Twitter, there are hedge funds, there are big players in the market who are all rotating out of software because they believe that this bubble is just a borrowing contest at this point. So we'll be on the lookout for both of those and expect both of those reports later on throughout today. Friday, we get our producer price index. Upstream inflation, last PCE was hot. Core reaccelerated, and if PPI runs hot again, that validates higher for longer. However, if PPI cools, that supports the tariff disinflation narrative. This matters because markets currently price cuts later this year, but sticky upstream costs complicate the path. So make sure you watch the energy pass-through, services components, and margins, because corporate margins plus inflation, well, that's just your simple valuation math. Now we have Home Depot, Lowe's, and consumer confidence, and these are recession early warning sensors. If housing shows life, that supports soft landing. If confidence slips again, then sticky inflation plus fragile consumer becomes a bigger risk. Right now, data says slow but stable and not necessarily cracking, but it's definitely fragile. So let's be honest and wrap this all up. This week is not about one narrative, it's about collision. Tariffs, they cool inflation. Oil heats it back up. GDP slows, and AI earnings decide the sentiment. The market is not trending. It's currently sorting and shuffling the deck. Sorting growth, sorting inflation, sorting geopolitics. And the key question isn't, is it bullish? It's which force dominates. If Nvidia delivers and inflation cools, well, risk on squeeze. If oil climbs and PPI runs hot, well, we're going to see a higher for longer rotation. And that's the environment we're currently in. Not panic, not euphoria, just tension. So just remember, the Supreme Court removed one lever. Geopolitics pulled another. And Nvidia might decide the third. Welcome to the week. Let's see who blinks first. I'm Max Pitts. This is Trades and Gains. I'll see you guys over on Twitch Monday morning for our first trading day of the week. And again, make sure you use that code SUPERMAX20 for 20% off your first month of Investor Central Club. And I'll see you guys in the next video.